Good morning and welcome to the program. This is Moneyline with Nancy, and I am Nancy Naji. Thank you all for joining us today. On today's edition of the program, we will be talking about capital importation data released by the NRBS, and we'll also be talking about how 28 states failed to attract investment in the first quarter of this year. Why is that? We only saw states like Lagos, Adamawa, Anambra, FCT attracting monies as capital inflow into their various states. What can the various states, now that we have new governors, can they do to attract investment into their states? We'll also be looking at this forex supply issues. So much has been done, at least in the last month. We've seen the RT200, that's the RT200 billion dollar scheme by the Central Bank of Nigeria has been suspended or perhaps abolished. The Naira for dollar scheme also suspended. We have a unified market right now, but you're still seeing that the parallel market, I think I said it yesterday, the Naira traded against the dollar at the street market at around 800 Naira. But at the I&E window, it traded for about 777 Naira to $1 dollar. So how unified is it? Because we're still seeing some kind of, between 800 and 777. You still see that difference. For people that do not want to wait for so long, they will perhaps go to the parallel market to get supply of FX. But what can we do in the mid to long term to attract investments that would also bring in foreign exchange into the country that will also strengthen the Naira? That's what I will be looking at today on the program, and my guest will be joining me shortly. Don't forget that you can connect with us on all our social media platforms. You can like us on Facebook. You can also follow us on Facebook. We're also on Threads now. That is Meta's version of Twitter. Threads. So Instagram Threads. We are also on Instagram Threads with Moneyline. At Moneyline with Nancy TV. You can also find me on Twitter, on Facebook, on Instagram, on Threads at Nancy Ilo Naji. What else? We'll be taking the business news in a bit. I'll be running you through the markets also. So let's quickly take a break to continue the program. Don't touch that dial.
Amazon Fire TV, Roku, and Android TV. You can also download the mobile app from the Google Play Store or the Apple App Store. Simply connect to the internet, download the app, register, and watch live or catch up on unlimited hours of exciting shows. AIT Cloud TV, TV on the go.
All right, welcome back. The Federal Inland Revenue Service has extended deadline for the submission of company income tax returns for 2023 year of assessment till August 31, 2023. Mohammed Namir, FIRS Executive Chairman, said the extension is in response to numerous calls from companies who failed to meet up with the initial deadline, adding that the extension is a one-off gesture for only 2023 year of returns, CIT returns. NAMI urged taxpayers to use the opportunity given to them to submit their CIT returns within the specified time so as to avoid payment of penalty and interest. The House of Representatives has asked the Central Bank of Nigeria to halt the demand for social media handles from bank customers. The House said the directive is in violation of customers' privacy. The motion was moved by Kingsley Chinda during plenary on Tuesday. According to him, banks already have names, telephone numbers, NIN, BVN, among other valid documents to identify customers. The Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, Mele Kyari, on Monday said plans were being made to sell shares of the organization through an initial public offering. He said the moves were consistent with his new status as a limited liability company governed by the rules of the Company and Allied Matters Act. Kyari stated this in Abuja at the ongoing Energy Week conference and exhibition. He disclosed that the NNPC Limited has identified key initiatives that will be pursued, especially the need to expand gas infrastructure to deliver the vital commodity across West Africa and potentially Europe. The NBS has disclosed that the average fare paid by air passengers in Nigeria for specified routes single journey rose year-on-year by 34% to about 74,948 naira in May 2022. But on a month-on-month basis, the average fare paid by air passengers rose to 74,948 naira 78 kobo in May 2023 from 74,947 naira in April 2023. In its report, the National Bureau of Statistics also disclosed that the average fare paid for water transport rose year-on-year by 11% to 1,045 naira in May 2023 from 941 naira 63 kobo in the corresponding period of 2022. According to the report, the average fare paid by bus commuters within the city dropped month-on-month to 649 naira 59 kobo in May 2023 from 648 naira 12 kobo recorded in April 2023, while it rose year-on-year by 11.6% to 649 naira 59 kobo in May 2023 from 581 naira 78 kobo in May 2022. The African Development Bank, in conjunction with West Africa Capital Markets Integration Council, has stated that its database and website, which are under development, would boost investors' confidence by providing them with healthy and dependable unified statistical data across West African markets. The DG of West African Monetary Institute, Olorunsola Olowofeso, stated at the that the Nigeria Customs Service will henceforth keep over 4% of the free on-board value of imports for its operations in line with international best practice as provided by its Enabling Act. This is the first time since its inception the service will finance its statutory responsibilities from revenue it generates as provided in Section 18 of the recent Nigeria Customs Service Act. Still with the customs, the acting Comptroller General of the Nigerian Customs Service, Wale Adeni, says not all borders in the country have been reopened. He made the clarification on Tuesday while speaking to State House correspondents after a meeting with President Tinubu. He added that while selected strategic borders were reopened in 2022, a review is currently underway to assess the objectives of the closure. Now, to mark the World Population Day, the chairman of the National Population Commission, Nasir Isekwara, has called on the government and critical stakeholders to create opportunities to empower women and girls by uplifting and ensuring gender equality for a secure future and development in Nigeria. Our correspondent tells us more.
Nigeria has joined the rest of the world to celebrate the year's edition of World Population Day, with the theme Unleashing the Power of Gender Equality, uplifting the voices of women and girls to unlock our world's infinite possibilities, which draws attention to a sustainable creation of opportunities that will empower women and girls for a secure future for all. The chairman of the National Population Commission, Nasir Issa Kwara, who was represented by the member of the National Population Council, Chidi Ezekweme, called on the government and critical stakeholders to create opportunities to empower women and girls by uplifting and ensuring gender equality for a secure future and development in Nigeria.
Today's event is envisaged to create and sustain platforms for engagements that will garner collective ideas, information, and creativity on the best options to change the narrative regarding the plight of women, including young people in the world of 8 billion people. When voices of women and girls are recognized and given deserved attention regarding their pertinent needs in terms of quality education, in political positions across all levels.
United Nations Resident Coordinator Matthias Schmeil restated gender equality as crucial for sustainable development aimed at building a stronger community and prosperous nation.
We equip them with the tools to thrive. Education provides a foundation for them to pursue their ambitions, acquire skills, and contribute meaningfully to their communities and society.
The special advisor to President Bola Ahmed Tinubu on health, Salma Anas Kolo, while emphasizing the need for a healthy and prosperous nation, calls for a renewed commitment and investment as a drive for sustainable development.
On this World Health Day, let us renew our commitment to investing in health and education as critical drivers of sustainable development. Let us work together to ensure that every Nigerian has access to quality health care services and education opportunities.
The Permanent Secretary, Federal Ministry of Women Affairs, Monilola Udo, represented by Director Gender Affairs, Freya Kamdi Bulus, reiterated the continued effort of the government on gender equality for adequate empowerment of women and girls for advancement in the country's GDP.
The ministry strives to create a world where women, girls, and the vulnerable have equal opportunities, enjoy their rights, and can contribute to their full potential, thereby building a more inclusive and equitable future for all.
As we celebrate World Population Day, here is a call to build towards a sustainable and resilient future, enhancing opportunities and ensuring rights and choices for all. Norma Omeje, reporting for Moneyline with Nancy.
Now, let's move over to the markets. The U.S. stock futures open higher on Wednesday morning as investors look towards the first potentially pivotal inflation report at this week. So all eyes are on U.S. CPI data. Meanwhile, European markets were up in early trade with tech stocks leading gains as most sectors and major bosses in Europe nudged into positive territory. Still in Europe, the Bank of England released its financial stability report at the opening bell this Wednesday. For the Asian Pacific markets, they were mixed ahead of key inflation data being expected in the United States and the inflation data that came out from India. Is it out already? Okay. For gold futures, they rose in early trade after the dollar and bond yields retreated as investors await U.S. inflation data that could also offer cues on the Federal Reserve's rate hike policy part. And I guess that's why most markets across the world are really waiting on what the U.S. will say. You know, they say when the U.S. sneezes, the rest of the world catches a cold. Now, let's move over to spot gold. The price rose to about $1,939 as I speak right now, but what you can see on the screen is $1,935 an ounce, while all our prices in early trade crept higher as the market is caught between, what is it caught? It's caught between two things, I must say. Supply cuts and global economic weakness. For Brent crude, it gained this morning. That's Brent futures gained to about $79, as you can see on your screen right there, while US WTI rose this morning also. Okay, US WTI fell about 1%. If you take a look at other markets, as you see on the screen right now, palm oil is doing around $3,904 US dollars. Now, let's move over to Nigeria. On Tuesday, the Nigerian market saw an upbeat performance as the benchmark all-share index gained about 165 basis points to print at around 65,669. So the Nigerian market has really been on steroids, as I say. The year-to-date performance is at 28%. Right now, inflation is at 22.4%, so that's coming in positive. If you take a look at it, the market capitalization stood at around 35 trillion naira. The market breadth recorded about 39 winners on Tuesday as against 34 losers. Meanwhile, at the end of yesterday's trading session, volume and value declined that's at the end of trade. If we take a look at the most traded stocks by volume, they were Chams, FCMB and Universal Insurance, while GTCO, UBA and Nestle topped the value chart. If we move over to the money market, the OBB fell by about 7 basis points, while the overnight rate was down by about 8 basis points as system liquidity remained relatively stable. The Treasury bills market traded slightly with minimal interest seen across the board as average benchmark yield closed at 6.08%. For the local FGN bond market, yesterday traded on a bullish note with minimal sell interest seen on the 2037 maturities, while the FGN Eurobond market on Tuesday was largely bullish with an expectation of softer CPI inflation data from the United States that is expected to be released. Like I mentioned earlier, at the currencies market, the value of the naira to the dollar depreciated to about 777 naira 62 kobo to $1, while the parallel market rate is trading at around 800 naira to $1. And that's it for the markets. Let's quickly take a break to bring in my guest. He joins us virtually from Lagos. My guest is Tajuddin Ibrahim. He is the Director, Research and Strategy at Chapel Hill, Denham. We'll be right back. All right, welcome back. As you can see, that Tajuddin Ibrahim, the Director of Research and Strategy at Chapel Hill, Denham, joins me from Lagos virtually. Good morning to you, Mr. Ibrahim, and thank you for joining us.
Good morning. Thank you for having me on the show today.
Okay, so let's get started. We're talking about FX issues, FX supply issues, and the capital importation data that was just released by the NBS. I would like you to explain, the concept of capital importation. What does capital importation mean? First, let's start from there. Let's assume we're in an economics class. Because we shouldn't also assume that people understand what we are saying.
Yes, capital importation is when countries outside of one domiciled country brings in money in form of investment, and such money in form of investment is for them to look for investment opportunities across various sectors of the economy. So the economy we are talking about in this case is Nigeria, and it could be in form of investment. It could be in other forms being, for instance, debt. For example, when we have, borrowings, by companies in Nigeria, for instance, from other companies abroad. So it is still a flow of capital or a flow of money from such a country outside of Nigeria into Nigeria for investment purposes or for the purposes of debt obligation and so on. So those are the sort of breakdown of capital importation and what it really means. It, largely speaking, is a reflection of the level of investment from other countries into one's country of domicile.
Is that investment equals to confidence?
So the investment, largely speaking, should reflect, confidence, and that is why in many cases you will see different level of capital importation being reported by countries across the world. Naturally speaking, you would see foreign investors, go to countries where they are confident that if they invest in such a country, they will be able to, number one, they'll be able to run their businesses, seamlessly. Number two, they will see some level of protection, largely from the part of the government. They will also feel secured, and that is a very important element when we are, looking at foreign investors and what they are willing to do in any country. Countries where there are no confidence, where the confidence level of foreign investor is low, would naturally speaking record relatively low level of capital importation because investors that could go in there to invest are not confident, or their confidence level about such a country is low. And security is a major element for consideration when we talk about investors' confidence in going to other countries to invest.
Okay, I will come back to the issue of confidence later and what we need to do perhaps to drive that confidence up. But let's quickly break down the data that was released by the MBS for quarter one of this year. If we have a bit of that, guys, we can put that on the screen. But Tajuddin, help our viewers understand what that data actually means.
Okay, so the set of data released by the National Bureau of Statistics, there are key messages that I believe are in those data sets. Number one, our capital importation fell by 28% year on year to $1.13 billion in the first quarter of this year. But if we consider the level of the capital importation relative to the final quarter of last year, there was growth of around 6%, or let me say 6.78% relative to the level at the last quarter of last year. Another key element, that one has to take away is we have the capital importation broken down into three elements in terms of the type. Number one, we have the foreign portfolio investment, which in the first quarter accounted for 57% of the total capital inflow. Number two, we have the foreign direct investment, which was 39% of the total capital that flew into the country in the first quarter. The final leg of it is others, which represented only 4% of capital importation in the first quarter. And if we take a destination, if we take a look at it from a source of inflow standpoint, we recognize that Nigeria imports capital from 116 countries across the world. Nevertheless, we have only 5 countries representing 78% of the total capital imported over the period under review. And the first country is the United Kingdom, followed by South Africa, and that is followed by Singapore, the US, and also the United Arab Emirates. UK in particular stands out because 52% of the total capital imported into Nigeria over the period under review came from the United Kingdom. In terms of destination, the largest beneficiary in Nigeria is Lagos State, that had 68% of the total capital that flew into Nigeria in the first quarter, and we have FCT accounting for around 31%. So those are largely speaking, the key takeaways from the data set as published by the National Bureau of Statistics.
Now, Tajuddin, would you say that data that was published by the NBS, can we say that data gives us a picture of both FDIs and FPIs?
Yes, it does, because so if we take a look at it from an FPI and FDI standpoint, I said earlier that FPI was 57% of the total capital that flew in, and FDI was 39%. If we put it in context in terms of in currency terms, $649 million flew in the first quarter in form of foreign portfolio investment, while $435 million flew in form of foreign direct investment. But as a country, what we should be doing is to ensure we have a switch of that number. We should look for a scenario where Nigeria will be having more foreign direct investment compared to foreign portfolio investments. When we do that, we will have long-term capital, in the country compared to short-term capital, which is the foreign portfolio investment. Nevertheless, we still need more of the foreign portfolio investment, as well, because they are, some sort of support for our foreign currency reserves, and that has been the case, many decades, in the past. And we need to change that narrative if we are looking for, more foreign money that will stay in the country over a significantly long term. Now,
that means, even from this data, if I heard you clearly, FPI seems to be more, isn't it? If I heard you clearly.
And it has always been more.
Yeah.
Largely speaking, it's easier to flow in, and at the same time, it also flows out very easily.
So that means that FPIs are more volatile, actually, than FDIs.
That is very correct.
Now,
more volatile. Yeah.
Yes. Now, where I'm going to specifically is that the behavioral pattern of FPIs into Nigeria, if you take a look at it, is it detrimental to Nigeria's macroeconomic stability? Because FPIs are normally tagged as hot money, as it were. If there are other favorable economic conditions outside Nigeria, those FPIs will go.
Yeah, so I think FPIs naturally will look for global destinations, and the first consideration to my mind is confidence level in such a country, and also confidence level for them in the financial market of such a country. So if they have high confidence about our country and also about our financial market, they will come, and they are more likely to stay if they notice that we have the required we have the required factors that can make them stay in the country. For instance, we have, an efficient and transparent foreign currency market in such a way that when they bring in their capital, they can invest. And when they are willing to go, they can also get their capital out of the market and exit. There will always be inflows and outflows in an environment where confidence level is high, in an environment or in a country where the foreign currency market is transparent and also a lot efficient. So those are some of the key elements that I think foreign investors, as far as foreign portfolio investment is concerned, those are some of the elements they consider. If we now bring it down to our economy, it is positive for the economy because what it will do is that it will serve as an incentive for more global funds or more global money managers to also want to come and invest when they see rising levels. Second is that it will serve as a provision of liquidity for the central bank to utilize as far as foreign currency demand and supply is concerned. When we have extremely low level of foreign portfolio investment in the country, Nigeria, naturally speaking, will be suffering in terms of liquidity in the foreign currency market. When we have huge levels boosted, we have to bear in mind that we do not print foreign currency. We largely depend on what the FPIs, the FDIs bring in, and also other sources. And in particular, we depend largely on our own trade, so the external economy, talking about crude oil and other exported products in this case. So they are very useful in terms of underpinning our economic activities because they support liquidity. Those that want to import raw materials can get access to foreign currency if we have enough and robust foreign portfolio investment in the country. Those are some of the areas in which they are very useful to Nigeria.
Now, Tajuddin, I've read in and out about talking about FDIs and FPIs over the years, and just like you said, Nigeria, we've had that hot money come in as well as go out. Let me ask you this question, however that question, this my question might sound. Is there a way we can work out like a ratio of balance for FDIs and FPIs in the country? There was a time, for example, in the stock market, I think perhaps until 2 years ago or so, that we saw foreign investors mostly their foreign investors were the largest ratio in the Nigerian equity space. But I think at the time, retail investors, local investors overtook, I think, about 70%. Where I'm really going to is there a way we can balance the act? And if there's a way, what are the things that we need to do to balance the act? Or it's just a free-for-all market? Since we know that FDIs are mostly about ownership and control, as it were, and FPIs, it's not really that.
So let us put it in perspective, right? If we look at foreign direct investments that we have in this country, we have institutions and companies that run and underpin the overall economy as a whole. When you want to attract, such money that will come into this country and, set up businesses that will be producing goods and services, you need to be sure that you take care of, some key elements that I'm going to list as follows. Number one, the process of, setting up such businesses by foreign investors should be a lot seamless. It should also be simplified. It should not be it should not be uncertain. That should be also the processes of them setting up businesses in Nigeria. The second thing to my mind is around tax holidays or tax incentives, for instance, can be considered to encourage foreign investors to come into the country and set up real businesses that will provide job and also underpin the overall growth of the economy via the products and services that they render. If we also look at the third element to my mind is ensuring that we have an efficient and transparent, foreign currency market. Because when we have, these businesses setting up in Nigeria, some of them will have to import raw materials from abroad. So when they want to import raw materials, they should be able to have access to foreign currency that they want to use to, import raw materials for the production of their, goods and services. So that is also a very key element in my view. The fourth element that pops up in my mind is security. To invest in a country may be very easy, but foreign investors would like to check how secured is my investment, how secured will my employees be. So those are very important elements that I think we should also improve upon. If the news flows out there is that Nigeria is not safe, it will be hard to attract investors that will come and set up businesses in this country. The fifth element to my mind is diversification of such sources of FDIs. And by diversification, I mean Nigeria should look to engage more countries to encourage both institutions, corporates, as well as the government of such countries to come and invest in Nigeria and set up businesses. And I say this because of what I said earlier. I said Nigeria, attracts, capital from 116 countries as listed by the National Bureau of Statistics. But only 5 of those countries are very important because they account for 78%. Why not, a little, and then we have, more to other countries. So we need to engage more countries and diversify, that the base of the countries that we currently, get foreign, capital inflows from. So it is very important in my view.
Okay, Tajuddin, let me say this. What's coming to my mind? Local direct investment. In as much as we want to attract foreign direct investment, we should also take cognizance of local investors, local business people that can do business here, export their goods, and also earn dollars. So I understand what you've said, that the ease of doing business environment has also to be conducive for foreigners. But while it's conducive for foreigners, it can also be conducive for us. Can we also have an environment whereby the Nigerian economy is strengthened in such a way that many players in different sectors can do business, perhaps export their goods and services, and earn foreign currency into the country?
Very good question. Yeah. I think the answer to me is yes. We can do it. It is something that the country can achieve. If we look at local companies in this case, what do local companies need? What they need, number one, is that they want certainty and clarity around the taxes that will be payable on their businesses. And they do not want multiple taxation. And this is partly why, when President Tinubu, put some of the, duties and charges that were new on hold. Those are some of the reasons that, some manufacturers in the country, were very happy about that decision. And I think another thing that, we have to bear in mind is, infrastructure. We cannot take it away. If we have power, for instance, steadily, you will encourage more local manufacturers of goods and services, particularly those that fall into the category that we call the small, medium, and even micro enterprises. What they need is, they require the infrastructure, and power is a very major element of it. If we do not have power steadily for production of goods, what you will rely on are other sources or alternate sources, and that will be, you paying more to buy petrol, for instance, or to buy diesel to run your business. So it is very important. All these elements can come at a high cost. I'm talking about power in this case. But if it is steady and predictable, then we'll be talking about an encouragement for the local manufacturers. Another thing that we have to ensure that is efficient is transportation system. Some goods and services are manufactured outside of their state of major consumption, outside major cities, but they have to be transported to the cities. In the process of transportation, there must be safety, number one. Second, the cost must also, be low enough for the businesses themselves, to bear. So those are some of the encouragements or the incentives or areas that the government can look at and ensure that, we have them running efficiently. I so much, seem to believe in the new administration in terms of how things can turn out for this country in terms of, infrastructure, for instance. And if we look at Nigeria in the next 12 months, the story to my mind should be a lot better compared to where we currently are. And if we take a 4-year look at it, significantly, we should see, an improvement in the ability of local manufacturers of goods and services to do their business a lot more seamlessly and possibly at a much more cost-efficient rate than we currently have. Okay.
Tajuddin, for the next 2 minutes, let me ask you this question because I'm looking at our time and we've got to close. With what you've said that you have, you're seeing a green light from this administration. Do you think that Nigeria will now be an investment destination? And do you think that Nigeria is now ready to do business? If you take a look at this report, very abysmal that 28 states refused or failed rather to attract funds, capital inflows into their states. So what should be the charge to those state governors that are apart from the FCT, Lagos, Anambra, Ondo, and all, because some states attracted zero. Then secondly, the question of that local direct investment, which I asked earlier, and you certainly put the business environment has got to be friendly. Where does it actually also place our foreign exchange reserves? Because if you take a look at least in the last few days, the central bank has come up with different policies, no restriction on the domiciliary accounts, the unification of the naira. You can bring in your dollars, all of you that have stacked dollars under your bed, bring it now and deposit in the banks. Where does it leave the naira in the mid to long term? How do we address the FX issues that we're having now?
So let me start from the FX issues.
Yes.
So one thing that I believe Nigerians, should expect, going forward is a gradual improvement in the liquidity of foreign currency in the Nigerian market. We have seen what the CBN has done. I do not want to repeat, what you have said. But what I believe Nigerians should expect is the participation of the independent oil companies in the country. As the CBN has said, they should sell their foreign currency to the iron here window directly instead of selling it to the CBN. The ability of the markets to find a balance between supply and demand. Now we have huge demand and the supply is low. But with the IOCs coming into the market, we are going to see an improvement in that regard. The second thing that I think Nigerians should also expect is that the new administration plans to increase the foreign currency reserves to around $50 to $60 billion. What that implies is that over the next 2 to 3 years possibly, or even the next 12 months, Nigeria would need an inflow of around 15 to 20 to $25 billion into the foreign currency reserve. How are we going to get this? My sense is that, number one, the country most likely will look to borrow externally for long term to support our liquidity. Number two, we can also consider the issuance of Eurobonds That is not this year, but my mind tells me that it is something that Nigerians, should look out, for. And if we talk about the local production of goods and services, I say it again. What local producers of goods and services need is infrastructure being put in place. What they need also is for them not to have multiple taxes, and for them to also acquire, security. You will not be able to attract, foreign investment into your country, not to even talk about local investment, if the country is not safe. So other states where we are not seeing inflows of foreign investment, the governors of such countries should consider securing their state first. After you ensure, because there are states, for instance, in Nigeria, where they say people should sit at home and not go to do their businesses. So would such a state attract foreign investment? That will not happen. So security is a very key element when we are looking at foreign investors coming to invest in any state in the country. And I think apart from security, the state governors can also consider holding events like a conference of investment that will showcase your state. So internal investors, the local investors, showcase your state also to external investors, talking about foreign investors in this case. You invite them over. You provide them the required security. Let them come and listen to your and the opportunities that exist in your state in terms of investment. This may not materialize in the short term, but in medium to long term, you will be able to attract them to invest in your state. Those are my views.
Very insightful views, Tajuddin. Thank you for joining us. I enjoyed this discussion, at least deep into not just the report, but into FDIs, FPIs, and LDIs and FX issues. So thank you very much for talking with us on the show today. Have a good day. All right, I've been speaking with Tajuddin Ibrahim, who is the Director of Research and Strategy at Chapel Hill, Denham. It's a wrap from us today. Please join us again tomorrow for another edition of the program. I am Nancy Najibi, the best you can be, a bit of change that you want to see. Bye now.